Let's bring in Charu Chanana, Market Strategist with Saxo Markets. Charu, good morning to you. So basically, we are seeing some market reaction to the U.S. Expanded tech curves as expected. So what's the impact on China's AI industry?
Hi, morning, Henry. Thank you for having me. So certainly, I think it looks like US is keen to expand the controls that it announced end of last year because there were some loopholes. So of course, you know, all those high-end chips that come into China, which US claims are getting used for developing their military equipment, will certainly face more hurdles into getting there. There's been some reaction from also some of the big chip makers in the US, particularly NVIDIA, which seems to be getting the maximum impact of these restrictions. But I mean, of course, this is also a key concern in terms of where the US-China talks are headed and how geopolitics is framing up, where things are not starting to look up yet.
And all eyes would be on China's Q3 GDP data coming out later in the next hour. So what could be the highlights during the day?
I mean, of course, there are some expectations, having looked at those PMI numbers earlier in the month, that, you know, China economy could be bottoming out at this point. So, you know, the numbers, the consensus numbers are looking a little bit, you know, on the stronger side, especially on the retail sales, especially because the September was the month where the economy was heading into that Golden Week holiday as well. So there might have been some support to demand because of that. But having said that, you know, expecting a huge upswing from here is still, I think, going way beyond what China can deliver at this point, given specifically that property sector overhang that still is there and is also constraining the consumers in a big way. So I would think that, you know, we could potentially get some improvements there, but it's not something that's going to get investors extremely excited as well.
Well, if the data come out to be disappointing, do you see the possibility of Chinese authorities releasing more, perhaps, stimulus policies?
I would think, you know, they would continue to obviously expand their stimulus measures, but a massive fiscal stimulus still remains unlikely in China at this point. And I think the measures will continue to be a lot more targeted. A lot more efforts have come through recently to support the stock markets, particularly. I think that could remain the case. I think China is going to direct its measures to areas that need support to let things go much worse from here, rather than really push up things from here, you know. So I think that's the line of defense that they're using right now.
Charu, we're also expecting Chinese President Xi Jinping, you know, to deliver a speech at the BRI forum this morning in Beijing. So how China can balance, you know, its continued efforts in the Belt and Road Initiative with a slowing economy?
I mean, it's not just the problems with China, but also the Belt and Road has seen a little bit of a slowdown because the other economies involved are obviously having to face their own hassles of higher inflation, lower GDP growth, having to deal with the higher US dollar, which is obviously increasing, you know, the debt load that they have as well. So there are a lot of economic repercussions of from what is happening on the macro front for those smaller frontier economies that China has to deal with in this initiative. And of course, China itself doesn't have that flexibility at this point to massively announce increases in investments or debts to those smaller economies. So I think it will be really about how that conversation between the other economies and between China happens and how they kind of plan to continue with these initiatives from here.
Well, one more question before we go, Charu. With all the elements in consideration, how do you think it will, you know, affect the Forex market? In particular, we are seeing the rising US dollar and weakening Chinese yuan. What's the future trend?
So the rising US dollar is certainly the big trend in the FX markets right now. There's a lot of factors supporting further strength in the US dollar, coming from the kind of data that we saw overnight as well in the US, from retail sales to industrial production, still remaining quite strong. So signaling that Q3 GDP data in the US could still be around 4% or so. So that continues to fuel a higher for longer narrative for monetary policy. So even if the Fed does not hike anymore from here, they are potentially going to keep rates higher at these levels for considerable time, which obviously is a problem for the economy, but it certainly supports the US dollar at this stage. On top of that, we have that safe haven bid coming into the US dollar as well, given the Middle East crisis, and that continues to kind of develop, even though we have a situation where President Biden is visiting Israel and trying to contain the spread of the conflict. So overall, it does look like that strength of the US dollar could continue for now, unless, of course, one of these two things changes. Either we see a severe recession or stagflation concerns building in the US, which is likely, but it is being delayed for now because of the massive savings of the consumers. Or on the other hand, if we do see a peace deal, between Israel and Gaza, so geopolitical tensions relieved a little bit, but at this stage, even that is looking a little bit unlikely, unfortunately. So again, that goes to say that the US dollar strength could continue to weigh on the Chinese yuan, which obviously is weighed down because of policy divergence, because of growth headwinds in China itself as well.
All right, Charu, thank you for your comprehensive analysis as always. Charu Chanana, market strategist with Saxo Market.